Hey everyone, this is Jay, also known as jaynemesis on eToro, where I trade as a popular investor. This is our weekly update for week 38 of 2018. There's quite a bit of news to get stuck into this week, so I'm going to start off with Amazon. Amazon is set to expand the Amazon Go supermarkets. So back in 2016, Amazon first kind of unveiled to the world this concept of a totally cashier-free, staff-free supermarket that's basically fully automated. The way it works is that it uses a bunch of cameras to kind of detect what people are picking up and putting down off different shelves and all sorts of other different sensors. And this was first kind of trialed back in 2016. In 2017, we saw them open their second and I think their third different store that offers this. And they've been refining the technology over the past couple of years. But it came out last week that Amazon have finally unveiled plans to really expand this and go big with it. They're basically planning on creating around 3,000 Amazon Go stores across the US by 2021. So that's some really, really substantial expansion. On top of this, Amazon has been working hard on the kind of things that it's actually going to sell through these stores as well. And they recently even announced some other interesting new products that are kind of smart devices for within the home as well. So I think the idea here is to try and, if they can, actually sell their own meals and their own like meal kits from the Amazon stores, which is kind of an interesting thing. Like they're not going super budget and they're not going super high end, but they're kind of hitting a middle ground in terms of what they're selling in these supermarkets. And obviously, of course, going totally cashier free is a big money saver for Amazon. So it gives them a really big competitive advantage. I did some digging around to try and actually find some footage from within the stores that isn't just the marketing stuff put out by Amazon, but I couldn't really find much. I did find a few reviews, though, from people who actually live nearby to some of these stores and use them actively. And they said that at first it seemed like a bit of a gimmick and they were playing around and trying to trick the system and see if they could effectively steal stuff. But after some time, they actually kind of, settled into it, and they suggested that they can do their weekly shops in just a few minutes now, rather than half an hour or an hour or whatever. So this is pretty interesting stuff and kind of exciting, I think. We have seen experiments like this done before over in Asia. So Alibaba is working on something very similar of their own. They have a store within the Alibaba campus, I believe. And there's also, in Japan, quite a few cashierless systems already that use RFID technology. So Amazon's is definitely more advanced, and certainly they're the first people to really try and push this at a big scale. So I'm pretty excited to see where this goes. I think this could be a really, really big part of Amazon's business and potentially lead to some disruption for some of the other big supermarket chains. Netflix have also benefited from some good news recently. They tied HBO for the most Emmys this year. So this is the first time that a streaming service has ever done this, as far as I'm aware. And they actually got quite a few of the big, really prestigious titles as well. And I think this actually is more of a kind of a result of the great content that Netflix has been pushing out, and also the quantity of content that Netflix has been pushing out recently. Certainly from my own experiences as a Netflix user, I've never, ever had this point before where I have so many things on my watch list that I want to watch on Netflix and have not yet, found time to watch any of them. So there's just, this steady stream of content coming out from Netflix. And we know from their earnings calls that they don't really plan on slowing that down or stemming the flow of this at all. So this is actually really kind of interesting because we've seen recently Netflix kind of banding around the idea of sending out some price increases. And seeing how that goes. We've also seen that they're trying to focus on markets outside of their big English-speaking markets. So they're really trying to focus on, some of the countries in Europe, such as Spain and Germany, and also over in Asia, they're focusing on India, for example. So I think this is pretty good news for Netflix, and to me it's a good indicator fundamentally that they are doing very, very well in terms of content, and I suspect they're going to have a really, really strong Christmas period, and most importantly have enough content to retain those users after that Christmas period comes to an end. So I'm actually pretty bullish on Netflix right now. I think this is some pretty good news to come out and I'm excited to see how the stock performs through the next earnings period, because the last earnings report was not actually so great. On to the crypto news. So starting with Bitcoin, there was actually a really major bug discovered on Bitcoin last week. The bug in question was reported to the developers pretty early, and it actually resulted in two different vulnerabilities. But what's interesting is that although both of these vulnerabilities were patched and fixed really, really quickly, only one of the two vulnerabilities was actually disclosed to the public prior to that patch being released. In fact, it wasn't until sometime after the patch had been released that they finally released to the public the severity of the second vulnerability. So effectively, the two different attack vectors were, there was a way of effectively DDoSing nodes that run Bitcoin effectively. And it was basically using some double spend trickery. This is effectively the vulnerability that was found by someone and reported and asked to be fixed. And it's not a great vulnerability to have whatsoever. Potentially, although very, very slim in the chances, it was possible to effectively bring down maybe half of the Bitcoin network or something like that, in theory. Obviously, this didn't happen. The second vulnerability was actually much, much worse. And effectively, although it was an expensive attack to carry out, could have enabled people to print additional Bitcoins. So the hard cap of 21 million Bitcoins could, in theory, have been broken, and extra coins could have been created and put into the Bitcoin ecosystem effectively. Neither of these attacks actually took place, and since then we have had a patch, and the patch has been very, very widely adopted very, very quickly. It was pushed out incredibly quickly by the Bitcoin core developers, and we're now in a pretty safe space, so there's really not too much to worry about. One of the interesting side effects of this, of course, is that there are an awful lot of cryptocurrencies that use Bitcoin's code or have forked off of Bitcoin, and so use a lot of the code within Bitcoin. So a lot of other cryptocurrencies, such as Litecoin, for example, were also affected by this and had to patch. And it's pretty likely, I think, that a lot of the smaller cryptocurrencies have still not actually patched this bug yet. So certainly if you're someone that's in a lot of altcoins that were forks of Bitcoin, it's something to be a little bit wary of and just kind of keep an eye on. I don't think it's likely to be abused at this point. And I think probably by the time you're seeing this, most of the major cryptocurrencies have patched it. But certainly it was a reminder of just how fragile everything is, and that even Bitcoin, with its elite level of developers, still runs into these kind of problems once in a while. Next up, XRP. So before we get into my trades on XRP, which I'll discuss later on in the video, I just kind of wanted to go through some of the reasons behind the big price move. So if you go online, you search what caused this big price surge, you'll see some people saying what I'm about to say, and some people suggesting that it's to do with the recent partnerships that were announced by Ripple. Personally, I don't think it's anything to do with the partnerships, because they came pretty late into this bubble, and so that implies insider trading, and I just don't think that's very likely given the history of Ripple's partnerships. Actually, there haven't really been that many partnerships that have caused these kind of big price surges, whereas the hype around some kind of key events have definitely delivered big spikes like this in the past. One of those, of course, was Swell. So in a week's time, Swell 2018 takes place. It's Ripple's big show-off event where they talk about everything Ripple and XRP related. I suspect there'll be a lot of discussion around XRapid. A lot of people speculate that this is where they announce a lot of new partnerships and things, although last year was kind of disappointing on that front. But I think that's part of the reason for this big spike. Hype prior to the event that effectively just kind of got out of control and slightly FOMO'd. Maybe a lot of short squeezes took place as well. On top of that, we had the launch of XRapid, which is effectively the crown jewels of the XRP protocols, basically. So there are a few different products by Ripple, such as XVia and XCurrent, and of course now XRapid. XRapid is the one that everyone who's in XRP, all of the XRP fans are really excited by, because XRapid is the one that really delivers large-scale solutions and real cost-effective money transfer, basically, and settlement. So this is the one that everyone's been excited about. I think this combined with Swell and, of course, then that news that came out as well, combined with the fact that the markets were all pretty depressed and, I think a lot of buyers were looking to jump on any sort of bubble and try and, pump it up and help bring cryptocurrency out of this lull is what basically kind of drove this. And we saw a couple of other cryptocurrencies really follow this. Most notably was Stellar. So Stellar basically followed XRP on this move, maybe half an hour later or so, and rallied pretty high as well. Eventually, XRP did settle around 50% lower than the top of the spike, so still a really, really nice rally for Ripple. So let's take a look at our trading stats for this week. 2% portfolio change into the green, so obviously good news there. Despite some of the big losses, we saw the overall portfolio still move pretty substantially upwards. The realized profit is where we really felt some pain, though. 2% of this was caused by our XRP trades, so over 50% of this realized loss from just 2 trades that went against us, minus 3.66% in total. We traded 40 different times, with 27 of them profitable and 13 unprofitable. Our most traded asset this week was AMD again. So let's dig into our crypto recap, starting, of course, with Stellar. So we have 4 trades in Stellar. 3 of them were down and 1 was up. So some pretty substantial losses and a pretty decent gain as well. A bit of a mixed bag, but definitely towards the downside, unfortunately. So a lot of the trades that I closed here were effectively before these rallies in both Stellar and XRP took place, before the overall market kind of reacted to that as well. So those positions were me taking some precautions and trying to take out some pretty, palatable losses as opposed to major losses, ahead of what I feel could still be coming, by the way, which is a move down to 4K or so for Bitcoin, and of course, as a result, for all of the other cryptocurrencies. So that's potentially another 20% or so, maybe even 30% drop still to come, I think, potentially for cryptocurrency. I'm still not convinced that this is necessarily going to happen. I kind of hope it doesn't, to be honest. We still have plenty of money invested in cryptocurrencies, so it's better for us if it doesn't happen. But we are now in a better position for if it does. With EOS, 1 position closed, again, just below break even. This is pretty much just to reduce my exposure ever so slightly. This is part of a wider effort to reduce exposure at the moment, again, because I think there is potentially a bit more downside, so we can buy in later. And also because I've kind of shifted my strategy and my thinking a little bit in terms of how I balance my portfolio between crypto and stocks, which I will talk about a little bit later once I finish this crypto section. Ethereum, a nice quick trade here that was based off of the flippening that took place between XRP and Ethereum. So during XRP's big spike, it overtook Ethereum and became the second biggest cryptocurrency. I figured there's no way Ethereum isn't going to pump at least a little bit to try and hold off this attack on its number 2 spot, and it did do exactly that by about 5 or 6%. So we benefited to a reasonable degree, closing at 4.3%. Onto XRP. So this is the big controversial one for some people, at least. So I opened 2 shorts on XRP. I actually opened 2 shorts originally, one on Bitcoin Cash and one on XRP, actually just before all of this spike started. So it was pretty unfortunate timing. The Bitcoin Cash position is still fine and, sitting on around about 12% loss at the moment, which I think is pretty reasonable given the spread. But the XRP position got called pretty quickly, to be honest. And I was very, very surprised and did not expect this rally to happen in XRP. And honestly, I don't think very many other people were either. That being said, of course, as a lot of people have pointed out, it wasn't the safest time to open that position, and I was taking a risk. But this was a hedge position designed to give us some sort of substantial bonus if the market did drop further, because from the track record, we can see that XRP and a few other cryptocurrencies fell much, much more than Bitcoin did when Bitcoin dropped, and I felt that another drop was going to be coming, so I wanted to position us in a way that we could benefit from that. Unfortunately, it went against us. We lost 100% of that position, which is 1% of the portfolio. And then following that, I decided to open a second position because I looked at the spike and I thought this cannot survive in its current form. I expected it to drop back down by at least 20% or so. And I also still wanted some of that exposure, if I'm completely honest. So I opened a second position, and this one is the one that actually did kind of frustrate me a little bit. While I was out in London with my girlfriend celebrating her birthday, the position got called at almost the highest price that XRP spiked up to. So right now, if that position hadn't closed then, it would still be sitting on maybe just a 10 or 15% loss, which again is something pretty palatable and something that I would be happy to hold on to for a while longer, maybe until we see something from Swell, perhaps, for example. So rather unfortunate on the second position. The first position, I think I just got caught out by the market on that case. The second one, I mean, again, I got caught out by the market, but I think I was really unlucky to have it actually be closed. If I'd have opened it even, 1 or 2% higher, that position would still be open now and at a much, much smaller loss than we unfortunately incurred from it. But hey, that's how it goes in trading sometimes. It is unfortunate, but at the end of the day, it is only 2% of the portfolio that was lost. So it's not the end of the world. I don't regret taking the positions. And I think, given the data that was available to me at the time, there was no reason to expect what happened. On to Cardano. So 66.6% realized loss here. Again, this was the same reason as the position in EOS and some of the positions in Stellar, to reduce my portfolio position in these cryptocurrencies a little bit, just a little bit. And the same again with the last Bitcoin position as well. So trying to reduce some exposure just a bit and weigh my portfolio slightly more heavily towards stocks at the moment. So some of you will have heard me use the phrase rebalancing a few different times now. And you're probably wondering what's going on with these big closes on Cardano, Bitcoin, and Stellar specifically. Although the EOS one was technically the same, I guess, as well. Effectively, what I'm doing here is I'm analyzing my trading performance right now, and I have decided that I don't think it's worth me being weighted quite as heavily as I am into cryptocurrencies. And this is potentially a big long-term shift for me as well. So currently, what I try to do is split my portfolio roughly 50-50 down the middle between stock trading and cryptocurrency positions. What I've realized recently through a combination of higher spreads on cryptocurrencies and also just much, much more volatility is that it really, really hurts my portfolio a lot with the crypto stuff. And on top of that, I've been trading really quite well on the stock side of things recently. I've had some really, really good picks, and I've kind of found myself lacking spare cash in a few situations to make the most out of some of the different opportunities that I've spotted in the market for stocks. So a good example of this is AMD, where I've been trading really, really heavily. Again, you'll see that again this week. And we've been seeing consistent, solid gains week after week after week. On top of that, we've also benefited from holding it long term. And, it's been one of the best performing NASDAQ stocks of the year. So I just felt that it was right for me to start to shift that percentage around. I haven't really settled on a defined figure in my head. I do think it still needs to be at least somewhat flexible, because at the moment, while we're in a bear market, obviously it makes sense for me not to have too much in crypto. But when we have, properly turned around and there's real, bullish signs that show that we have turned around and we've not only have we bottomed, but we've started that bear rally back up. At that point, it may be worth me heading back towards 50% again. But I think, generally speaking, I want to try and stick to somewhere around 40% or so. So that's why I wanted to try and close out a few positions and just kind of reset things a little bit to make it easier for me to stick to that, and also to free up some funds, although at those losses it wasn't a huge amount of funds, to also help me more with my positions in the stock market. So speaking of the stock market, let's take a look at the trades we did in stocks this week, starting with Micron. So Micron is a stock that I've been very, very wary of. It kind of overlaps quite a lot into some of the different industries that I really like to trade, such as the chip manufacturing stuff with AMD and Intel and Nvidia. But I have always found might want to be very, very volatile. So I kind of set myself a rule previously to never buy into it unless it's after a really, really big dip. And that's what I did here. I did 2 buy the dip style trades. One of them went actually reasonably far into the red, even though I did that. But eventually I turned them both around for a 2.3% profit and 2% profit. Activision, one trade closed for 0.4%. I didn't really write anything after this because there's just not much to say about it, really. The trade was a bit slow to take off, and I just wanted to close it, really. I had quite a few positions in Activision. I kind of expected it to rally a little bit more quickly than it has, and I just felt like the money was kind of wasted there compared to some of the other opportunities that I've seen around me. AMD, so AMD again, the most traded asset of the week. I don't know how many trades I've done in AMD this year, but I think it's a lot, like maybe 200 or something. This time we had 5 longs, ranging between 3% loss and 2.1% gain, and 9 shorts. So a lot of shorts on a stock that I love. So some pretty ballsy trading, and we can see that from the biggest loss, which was minus 10.3%. And the gains were a little bit smaller here, around 4% a piece. Overall, when you take all of these trades into account, I ended slightly below break even in AMD. And this is basically because I got caught out by a stop loss. There was one day when the market opened, I had a lot of shorts open. The price surged way up to above $32. It was actually almost the all-time high for AMD that it surged up to. And then it immediately, within a few minutes, just after closing all of my positions in stop losses, surged straight back down to where it was at around $30. So that was really, really painful for me. I lost, at least 5 or 6% on those trades from where they were to where they got stopped out. So not ideal, pretty frustrating. It meant that all of those trades were effectively worthless. And honestly, I think some of the shorts that I had done there were really pretty good. Snapchat hit a new all-time low this last week, and I used that as an opportunity to buy one very, very small position, no leverage or anything like that. Turned it around for 0.05% profit, and then kind of thought better of it. I have been bearish on Snapchat for a long time. I'm still bearish on Snapchat, but unfortunately, eToro seems to have problems getting hold of liquidity for me to short it. So it's pretty difficult for me to actually open short positions. But, I'm still watching the stock. So, hey, a profit is a profit at the end of the day. And it was a very quick turnaround as well. I think it was only open for a few hours. Baidu, again, another really, really small profit, another position that I've just been kind of hanging on to for a while, and it's kind of just lingered at around 2 or 3% loss for a really long time. It went green, but not by a big amount. And honestly, I wasn't too confident in my reasons for buying in the first place, although I think Baidu are doing some pretty cool things. I just don't feel super confident in that position, so I decided to close it for 0.7% profit. Square, as we know, is one of my favorite companies right now. I think their previous earnings calls, if you haven't listened to them, are really worth a listen because they have just got their fingers in so many pies right now. They are attacking all markets pretty much, and I think that they're in a really, really strong position to take advantage from the next cryptocurrency rally as well. So I think we could potentially see a big boom out of this stock. But that being said, I'm still trying to trade it actively and kind of keep my positions refreshed and, just take any small opportunities that I see. So 2.1% profit and 1.8% profit were taken this week. Again, always trying to rebuy in a lower price effectively. So nothing super crazy, not trying to go for any big gains here, just some consistent small trades here and there and just keep cycling over. Whilst maintaining that exposure to Square. Google, 0.8% profit. This trade was over around a week or so. It was originally designed to be a bit more of a day trade, but 1 week is pretty reasonable for that kind of a return, in my opinion, when you're not using leverage. Obviously, if Google were to return that every single week, you'd be looking at 50% profit a year. And obviously, if you were holding that all of that time, it would be different, obviously, because of compounding interest and all this kind of stuff. So actually, it really does show that it's a pretty decent trade, even though it's just a week, even though it's quite a long hold time for 1 week. SolarEdge, probably some of the trades I'm most proud of this week. I saw a really, really nice dip in Solar Edge. I was super confident that it shouldn't be at that price. I think it was dropped under $40 for a while, and I opened one position below it and one slightly above it, and returned 2.8% and 5.7% respectively. I think actually I could have probably ridden this trade a bit longer and got more out of it. In fact, I know I could have because I've looked at the price. So, I think 10% was possibly on the cards here. But regardless, it was a pretty quick turnaround, so there's not too much you can complain about there, really. On to Etsy, 0.6% profit and a 16.3% profit from two positions. Again, like Square, trying to be pretty careful on how I trade this and make sure that I keep some good exposure, but also kind of cycle out some of the older positions. So the 16.3% was opened a reasonable time ago, and I wanted to make sure that my new copiers kind of got in on that. So closed it out, waited for the price to drop a little bit lower, and buying back in again. So some good reasonable trades, not being too greedy. Wix, again, a similar situation, but I'm not as fussed about keeping exposure here. I think Wix is definitely towards the higher end of its price target range. I was thinking more $115, $120, and we have got pretty close to that a few times. So the price seems to be sort of fluctuating between 110 and 114 or so at the moment. So hopefully I can kind of trade that a bit more and do some more trades like this for, in this case, 0.7% and 1.4% profit. NVIDIA, one trade for 1.8%. Frankly, I don't actually remember much about this trade, so I'm not going to try and talk through it. I genuinely can't remember when I opened this trade or how long it was for or anything like that. But I do still like NVIDIA, so I'll be keeping my eyes peeled and trying to find another good buy-in opportunity there. And finally, the last trade, Nintendo, 0.5%, just another day trade. There's not too much to say about that, really. So let's see where that has kind of pushed us to with the portfolio. If we look at the portfolio change, you can see that actually we're looking pretty good here. If you look at just the color along the top, you can see that September is still red reasonably substantially, but remember that number was substantially lower, down at around 10% or so, and we're slowly catching up a bit on that front. The weekly side, again, looks pretty good, 2% profit on portfolio change. That's pretty good. If we look at the realized trades, and again, a totally different picture here. What's interesting, and I was discussing this with Jesse actually before filming this video today, is that the realized trades tends to sort of correlate with the portfolio change, but follow it. So if you remember about 2 weeks ago, 3 weeks ago, if you go back through the updates and you look at this portfolio change percentage as soon as we implemented it, a lot of it was red at the top, and a lot of the bottom where there's greens, where there's realized trade, there was a lot of green. And now we see that flipped, and it's basically because the realized trading tends to follow the portfolio change, because the portfolio is going up, means we have more positions in green for me to close as a realized trade in the green, right? That's effectively how it works. Obviously, there have been a few spanners in the works this week. With some of those big crypto rebalances, you can see that most of the realized loss that we have for September is from this week alone. Last week was basically break even. Week 35 was basically break even. Week 36 was down a very small amount as well. So this week really is the one that has kind of unfortunately put the nail in the coffin in terms of September being a profitable realized trading month for us. So unfortunate, but we'll move on from it, and hopefully we can turn things around in October. Looking ahead, Blockchain Live takes place in London this week on Wednesday. I will be there, so if you are there, come and say hello. Tickets to this event, as far as I can see, are basically free. There is a premium ticket that gives you access to the main stage, where you get to see Joe Lubin, Dan Larimer, and a bunch of other really smart people. Alex Tapscott, for example. But the rest of the event, from what I recall last year, was very, very, very good. Last year I did have the more expensive ticket because I managed to blag one for free from EOS, which was very, very cool because I got to meet Dan. But regardless, I'm very excited about attending this event. It's just very, very interesting, especially the government panel is the one I find most interesting, because they talk a lot about regulation and regulatory environment. They also talk about a lot of different use case stuff and potential government use cases, which I find super, super interesting. So things like health records, using blockchain technology in policing, and all these kind of things. So some interesting panel discussions hopefully lie ahead for me. Come say hello if you're there. Last of all, of course, earnings season is back soon. So next month is when, for the most part, it kicks off. There will be a few before then. We've already had a couple of small ones that I don't really pay too much attention to. But I think the next 2 quarters are going to be pretty exciting in terms of some of the things we trade. So AMD specifically, very, very important earnings period for them because the price has absolutely shot up since last time. They're in a really strong position over Intel. It really just depends on if they can actually convert the opportunity that they've got into some real money effectively at the end of the day. Same for, companies like Netflix. I think Amazon should just, stride along pretty comfortably. The same with Microsoft and Google. Apple, it'll be interesting to see what happens there. So there's a lot of cool and interesting earnings reports that I'm looking forward to seeing. And of course, we're getting towards the point where the solar guys actually start to make some good sales as well. So a lot to look forward to, and a lot to kind of position our portfolio for as well. So I'm going to be trying to make sure that I have all of my positions set up ready for that. And I'll probably start slowing down my trading after the next week or so to prepare for some slightly more long-term positions. That's it from me, guys. Thanks for watching. Slightly longer than normal episode. There was a lot to talk about. If you want to kind of follow me more, then check out my Twitter, my Twitch, my YouTube, and of course eToro. And I will see you guys next time.